years ago, until I found out that all I needed was a coach. Put me in the game, now it's nothing but smoke. I got the blueprint, no time to waste. I'm back in business, back in the race. Business is business, I had to find a coach.
Hey everyone, and welcome to 24-Hour Trade and Invest. I am Dr. Christiana Nice, and today we are going to go over how to build a balanced investment portfolio, okay? And just a reminder, this is not financial advice. We are not financial advisors, just simply going over the information and resources that's available within the 24-Hour Trade and Invest GPT. And if you want access to the GPT, all you have to do is click the link below to download and get your subscription. Okay. All right. So let's begin. So building a balanced investment portfolio is key to minimizing risk while maximizing returns. So it involves diversifying across asset classes, sectors, and strategies to protect your investments from market fluctuations. So here we're going to go over the step-by-step, kind of like roadmap to help you get there. Okay. So number one, you need to define your investment goals and risk tolerance. So before selecting investments, you need to ask yourself, what is the time horizon? So is it short term, like 3 years? Is it or less? Is it medium term, like 3 to 10 years? Or is it long term, 10 plus years? Okay. So that's number one. You need to write that down. Okay, what are your goals when it comes to the time horizon? And then next is, what is the risk tolerance? Are you going to be conservative? Are you more moderate? Or are you very aggressive? All right. And then after that, what are you investing for? Is it for retirement? Is it for wealth building? Is it for passive income? You need to know these things and have this foundation built before you actually move forward. So make sure you write that stuff down right now. If you have a notepad, pen and notepad, write that down. What is your horizon? Is it short term, medium, or long? What is your risk tolerance? Are you conservative, moderate, or aggressive? And what are you investing for? Okay. Next, you want to go over the golden rule of thumb. Younger investors with longer time horizons can afford to take more risk, but older investors nearing retirement should really focus on capital preservation. Okay. All right. So next, you want to choose your asset allocation. So a balanced portfolio should contain a mix of different asset classes, each serving a specific purpose. Okay. So you have your asset class, your purpose, and then your risk level. So you have stocks and equities. The purpose is for growth, and the risk level is high. Then you have your bonds, which is fixed income. The purpose, stability and income, and is low to medium. You have real estate, also known as REITs, rental properties, purpose to hedge inflation and provide passive income, and it's medium. Then you have commodities like gold, silver, oil, etc. All right, and that purpose is for inflation protection and to hedge, and that's medium to high risk level. Then you have cash and cash equivalents, so liquidity and safety, and this is a low risk level. And then you have crypto and alternative investments, okay? And it's, speculation and high growth potential because it's kind of in a gray area, and it is a high risk level. So always keep those things in mind when you're trying to figure out how to diversify your portfolio. Now, a suggested portfolio breakdown based on risk tolerance. So you have your risk profile, stocks, bonds, real estate, commodities, and cash. Okay. So conservative, low risk, you want 30% stock, 50% bonds, 10% real estate, 5% commodities, and 5% cash. And then as far as the moderate balance risk, you want 50% stock, 30% bonds, 10% real estate, 5% commodities, and 5% cash. Now, aggressive high risk, you want 70% stock, 10% bond, 10% real estate, 5% commodities, and 5% cash. Okay. All right. So let's move on down to number 3, where you're going to learn how to diversify across sectors and industries. Okay. So you've always heard that term, don't put all your eggs in one basket. Same rule applies for your portfolio, So You don't want to put all your money into a single industry. You want to diversify it. So instead, invest in multiple sectors to reduce risk and capture growth opportunities. All right. So key sectors for diversification, you have technology, which is like Apple, Microsoft, Nvidia, Google. You have healthcare. You have consumer staples like Procter & Gamble, Pepsi, Walmart, financials, energy, utilities, real estate, and industrials. Okay. So you have all these options. You don't have to just stick to one. Okay. So remember that. And the best way to diversify, use ETFs because they hold and carry more, I like to say, equity within their ETFs. Okay. So you have, you're exposed to different businesses and companies within that one ETF. So like SPY, I love SPY, that's my dog. VTI, VGT, VHT, and VNQ. And you need to do your due diligence on all of these. So your homework, if you're listening to this, is to do your homework on these ETFs so you can find out more about them and have a better understanding about what they are, what they hold, and all of that. Okay? All right. Now, number 4, consider international exposure. Okay? Don't just, invest in U.S. stocks. We love the U.S., but you have other options. Okay? So, think about adding global diversification to reduce country-specific risks, all right? Especially depending on the administration that's in the office at the time, you really want to pay attention to all of that, okay? Now, the U.S. market, 60 to 80%, international, 10 to 20%, emerging 5 to 10. So examples, some ETF examples is VXUS, and then VWO. Again, do your due diligence. That's your homework, is to look up these international ETFs to see if it'd be a good fit for your portfolio. Okay? Now, number 5, balance growth versus income investments. Now, a good portfolio has a mix of growth stocks, high reward, high risk, etc., like Tesla, Amazon, Nvidia, okay? And then you have dividend stocks, which is steady income and stability. You have REITs, which is passive income and real estate exposure. So some examples for dividend ETFs would be VYM and SCHD, all right? So again, you have more homework to do, all right? Now, number 6, you want to rebalance your portfolio regularly. You want to look it over, you and your accountant. Over time, some assets will outperform and underperform, and shifting your portfolio's balance is really important. So you want to review and rebalance like every 6 months or yearly to maintain your desired allocation. Example, if stocks grow from 60% to 75% in your portfolio, sell some of them, a portion of it, and move into bonds or cash to reduce risk. Okay. And again, your accountant or whoever you have helping you with your financials will help you with this as well. Okay. Number 7. Do not ignore market trends and economic cycles. Okay. You need to stay informed on interest rates, inflation, and global events to make strategic adjustments. So high inflation, you want to add commodities, energy, and real estate. Recession fears, you want to shift towards bonds, dividend stocks, and cash. Bull market, which means it's going up, you want to increase growth in stocks and tech exposure. Okay, this is really important right here. This just gave you the blueprint. All right, so take a snapshot, do what you need to do, take your notes, but just know. Okay. All right. And number 8, you want to keep fees low and use tax efficient accounts. So avoid high fee investments that eat away into your returns. Okay. So best investment accounts for long-term wealth would be like 401ks, IRAs, Roth IRA, brokerage accounts. Okay. So just make sure that, again, do your due diligence. You are the boss when it comes to your money. Again, we are not financial advisors. We're just giving you information and resources for you to review, for you to go over and make your own decisions. Okay. So you can use low-cost ETFs and index funds from Vanguard, all right, which is VTI, VU, and VGT. More homework for you to do, guys. All right, so your final portfolio, this is an example of a moderate risk portfolio, okay? So you have your asset type, you have your example investments, and you have your allocation, okay? So you have your US stocks, you have VU, let's say S&P 500 and VT, which is the total market, and you have 40% of that allocated. Then you have your international stocks in your portfolio, which we're going to say is VXUS, all right? You have 15% of that. Then you have bonds in your portfolio, all right? And then you have 20% of that. You have real estate in your portfolio, B&Q for example, and you have 10%. Commodities, which is like gold and silver, 5%, and then cash and equivalents, so high yield savings and T-bills, 10%. This is a moderate risk portfolio setup, okay? So your homework, your next steps, I know I gave you homework throughout, but this is your next step. So you need to decide on your risk tolerance. Are you conservative? Are you moderate? Or are you aggressive? You need to choose your asset allocation. Are you going to be going for stocks, bonds, REITs, etc.? And you need to diversify across sectors and global markets. Just don't stick to the US. You have other options. You can invest in low-cost ETFs for long-term growth, all right? And rebalance your portfolio every 6 to 12 months to help you, make sure to maintain your portfolio. It needs maintenance. It just isn't, set it and forget it, okay? It is for some stocks. If you truly believe in that stock and you just don't want to let it go, that's fine. But for the most part, you need to rebalance every 6 to 12 months. And if you want help, picking stocks and ETFs and all of that, 24-hour Trade and Invest GPT is available. Like I said in the beginning, click the link below. You can gain access to this software. It's not like the regular Chat GPT because we have engineered it to give you certain outputs. It already comes with the prompts. It already comes with the resources, tools, strategies, and information that you need, okay, to succeed. So if you have any questions, definitely you can leave them down in the comments. We're always here to be of service. Again, I am Dr. Christiana Anise, and this was 24 hour, Trade and Invest. Talk to you later. Bye.
Go until I found out that all I needed was a coach. Put me in the game, now it's nothing but smoke. I got the blueprint, no time to waste. I'm back in